Good afternoon. Well, the Aussie share market had its best one-day gain since August today, rising 1.3%, pushing us higher for the fifth day in a row, with most of our sectors rising, taking the market back to now sit about 1.5% away from all-time high July territory. Staples and healthcare rose the most today, up over 2% each, with 6 sectors all rising over 1% each and following suit. It's important to note, though, we did have positive leads from the get-go, with US stocks closing close to 4-week high territory level, really on the back of US earnings season kicking off with a bang, with most of the US companies that reported earnings overnight beating expectations. Going into reporting season, expectations were downbeat, with FactSet expecting earnings across the top 500 stocks to fall by about 4.6% year on year. But already we've had good news. About 85% of the companies that reported last night on Tuesday smashed expectations. However, just hours ago, US futures turned slightly negative, suggesting Wall Street will open slightly lower this evening. In terms of what fueled the trading screens today, let's go through that. Well, the largest annuity provider in Australia, Challenger, CGF, they saw their shares jump about 5%. to $7.19, and that was a 3-week high. It comes as before market open, CGF announced annuity sales grew 14% on the prior quarter, hitting $842 million. Assets under management also grew, rising 3%. Morningstar's analysis says the stock is undervalued, and Morningstar says a fair value price for the company should be around $8.20, as its annuity business, which is 92% of its earnings, is positioned for long-term growth thanks to the aging population. Meantime, a nut and gluten-free product business, which you may have heard of, called Freedom Foods, FNP is their stock code, they were a standout today in the staple space, rising about 12%. to $5.80 after it was reiterated as a buy stock by Goldman Sachs, with Goldman saying the stock has 31% to grow in terms of its share price, really on the back of the dairy and nutritional businesses, as well as the plant-based beverage divisions, which are both set to grow over the next 3 years. Going the other way today, Afterpay shares copped a bit of selling, heavy selling in fact, as their shares fell about 7% after UBS initiated coverage of the buy now, pay later first moving giant as they sell, saying Afterpay's 12-month price target should be $17.25. And that's half of what it closed at yesterday, and contrary to what the analysts, or what most analysts, say. In fact, UBS says excessive growth is already priced into the stock, while regulatory risk is not. However, Afterpay says it is not exposed to such risks, as its AML and counter-terrorism programs really do ensure that there are no risks on the table. And they are, of course, in the midst of an audit. What are other brokers saying about APT? Well, Goldman Sachs sees upside. It has the stock as a buy with a price target of $42.90. Morgan Stanley's price target for Afterpay is $44. And Bell Potter has a price target of $41.61, saying a key driver for growth, which is yearly gross merchandise value, and that's expected to be $20 billion for FY 2020. And that's according to Afterpay themselves. Bell Potter expects the company to do better than that and hit a value of $29 billion. UBS expects $24 billion. And yesterday, APT shares hit an all-time high of $37.41. Today, they closed under that, $33.92. Moving on to commodities, the gold price has firmed higher, rising about 3% in our intraday session today, and they're at $1,487 an ounce. The oil price has edged slightly higher on the back of OPEC hinting that output is expected to fall, and that saw the oil price rise about 16 cents or 0.3%. It's now at $52.97, while the Australian dollar has continued to fall today, getting as low as the 67.3 US cent mark, really on the back of the US dollar continuing to gain. Do have a great evening. We'll see you tomorrow morning.